So, so hi everyone. This is Finance Meets Real Estate. So we meet here every Tuesday, 6:30 p.m. Eastern Time. We have amazing guests at our webinar every week. So this week we are having here August Biniaz. So he's a friend of mine. He's the co-founder of CPI Capital. Together with Ava Benesolki. If you guys remember, we've had them together at this webinar on a different topic before. And so today, August is going to talk about Build-to-Rent SFR, or Build-to-Rent single-family rental. It's a very interesting asset class, kind of very high-quality asset class, I would say, like aiming to, in a way, compete with multifamily, but sort of offer a better product potentially. And so, August is going to talk about the asset class. They have a live deal as well, so that's exciting that they've been doing in Tucson, Arizona. So yeah, if you make sure to check on that later as well, like towards the end of the presentation. So with that, I'm going to pass it on to August. If you guys have any questions, feel free to put them in the chat, or just and we're going to relate and open up for a Q&A at the end. So with that, again, August, it's a pleasure to have you here. Yeah, so the floor is yours.
Thank you, Stefan. A pleasure is all mine. Thanks everyone for attending. I'll try to do my best and present, this presentation. I feel it personally, being a stakeholder in the commercial real estate industry, I think is very important to bring some light to this new asset class, and also how this asset class will be performing over the next decade, or as time comes. A bit about my background: August Biniaz, co-founder of CPI Capital. CPI Capital is a real estate private equity firm with its focus on multifamily and BTR SFR, which is the asset class we're going to be discussing tonight. Today, we will be discussing this fascinating asset class. The build-to-rent asset class has not historically been part of the commercial real estate asset class. Commercial real estate is comprised of multifamily, industrial, hospitality, retail, office space. So BTR is really the new kid on the block of commercial real estate, and we're going to go over the next few slides and explain more about this asset class. This asset class is really so new that a name hasn't yet been cemented for the asset class yet. People call it build for rent or build to rent or BTR SFR. But recently, 20 members of the New Home Trends Institute, Build to Rent Council, they gathered and they wanted to come up with a name for this asset class, and the suggestion was build to rent. So for the purposes of this presentation, I will be using build to rent for the name of this asset class. So let's talk about where did this asset class really, how did it come about? How is this asset class a new kid on the block? How does that happen? How does a new asset class really come about within real estate? So now keep in mind that this business strategy, build to rent or managing single family homes as a portfolio, has been around somewhat, but not on the institutional level, not as an asset class that's very commonly used, which is becoming really today. And everything really started in post GFC, great financial crisis, 2009. A lot of foreclosures. Saying a lot is an understatement, but there's tremendous amounts of foreclosure happening across the U.S. and people are walking away from homes, or they've owned multiple homes, investment properties, and they're walking away from them. And this is when Wall Street gets involved. They're buying single family homes, pennies on the dollar. And the business plan is buying these homes, and then eventually when the market turns around, and they know the market will turn, is to put these homes back for sale and exit them. But the idea is, why keep the homes empty? While we're buying these large institutions are buying these homes, why should they keep it empty? So they start renting it out. And large institutions, the Blackstones of the world, had experience in multifamily. So they start managing and operating these assets, these single family portfolios and communities, just like multifamily, and they realized they actually perform really well, and they actually gain higher yields than multifamily does, the single family homes. So they start investing a lot of money into it until 2016 approximately, when going out and buying single family homes, the numbers are not just there anymore. The yields are not there. They're not able to buy these homes at pennies on the dollar. And that's when they switched their business model to actually start building and developing these single family communities. And that was really the birth of this new asset class, build to rent, single family rental.
So around which year, August? Sorry.
Around 2016.
2016, got it.
2016,
Okay,
2015,
makes sense.
2016, yes. So my next slide, I'm gonna just very briefly spend maybe a couple of minutes on each of these videos, but we're gonna see what the media is saying about this asset class. And everybody you see my screen, right? You just see my slide, just double checking that.
Yeah.
Okay. Great. So let's just watch this together.
Buying a home is still not getting easier or cheaper. According to a report from CoreLogic, home prices in April were up more than 20% from a year ago. Lots of people are priced out, so some are looking to rent a house instead, and developers are ready. There are now brand new suburban communities designed just for renters. CNBC's Diana Olick has the story of how some big landlords are now also becoming big builders.
It's moving day for Stephanie and Jake Murphy. These millennials just sold their home in pricey California and moved here to Mooresville, just outside Charlotte, North Carolina.
We didn't have any family in California. We have a 1-year-old daughter, and so we're getting closer to the grandparents.
And both Jake and Stephanie can now work remotely. As a dual-income family, they can afford to buy here, but they chose to rent a 4-bedroom home in a brand new rental community. The roughly $2,400 a month for rent is much less than their last mortgage payment.
We're just not sure if the housing prices will really stay where they are currently, so didn't want to buy at the peak.
Oops. Go back here. So we just play.
In our Priced Out of Jackson series, Action News Jax investigates what you face looking for affordable or even available housing.
Yes, the housing shortage continues. There's a growing option offering families all the perks of a brand new home without the long-term commitment. Imagine entire communities of single-family homes being built to rent. And that's exactly what we're starting to see more of here in Jacksonville. Right now, a quarter of all single-family homes in Duval County are owned by real estate investment companies. That's according to the Duval County property appraiser, Jerry Holland. Last month, Holland told Action News Jax he expects the trend to continue.
As that number keep increases and maybe eventually gets to a third of the properties, they will have an impact on the market as they put them back on the market for sale.
But some of these companies are not looking for potential home buyers. They want renters, and they're building entire communities just for them. The website BuildtoRentHomes.com shows this list of more than a dozen companies that build new homes for rent, including California-based American Homes for Rent.
You can really create an attractive neighborhood so folks can.
Yeah, so just wanted to kind of play those videos. So if you do a simple Google search or YouTube search, you can see that there's just so much new content, so much new information coming about this asset class, something that wasn't really there. And these are new. This is like in a matter of last few weeks or last few months. In this slide, I want to go over a research that John Burns Real Estate Consulting did recently, and they researched into institutions investing in BTR SFR. And here's what they found. In 2020, there was $3 billion invested into BTR SFR by institutions. 2021, that number jumped up to 45 billion, and in 2022, so far, just the first month, January, by end of January, there was 5 billion invested into this asset class. And just to blow your mind farther, this is equity, so this is not debt. So that equates to a much larger number of homes purchased, because when you bring in debt into it, you can see how much their footprint is in this asset class. So that's approximately 125,000 homes that large institutions are purchasing across the U.S. Yeah, I assume most people on the call are very familiar with multifamily and the benefits of multifamily. And one of those main benefits is really economies of scale that multifamily offers to investors. So it's by the way they're managed, by the way they're operated. And especially when you compare that to single family. So if you have single family or a duplex and one of your tenants moves out untimely, you're sitting at 50% vacancy. Whereas if you own a 100-unit apartment building, one of your tenants moves out, you're just at 1% vacancy. So these are the fundamental advantages of multifamily. Now, the interesting thing about BTR SFR or build-to-rent single-family rentals is that it actually behaves like multifamily by the way it's managed, operated, financed, by the way it's bought and sold. It's really bought and sold by the income approach, the cap rate approach, unlike the way it is like single family, which is a comparable approach. So single family portfolios and communities are really known as horizontal multifamily. So I wanted to go over those important points. Go to the next slide here. Benefits of build to rent. So we'll have our focus on benefits for residents who live in these communities, and also benefits for investors, being institutional or smaller investment groups, or even mom and pops who own a bunch of single family homes. So benefits for residents is that and this is more on the psychology of it, and one of those videos, if you would have watched it further, would have talked about it. But when someone lives in a community of single family homes, everybody in that community is renters, so they don't feel out of place. Where if you rent a single family home in a neighborhood, there's some people that are homeowners, some people that are renters. There might be some some concerns there with people feeling like they're renters in a community of homeowners. Whereas in these BTR SFR, everybody's a renter. So that's a benefit to renters. Maintenance-free homes. Again, this is not an apartment where it's also maintenance-free. Is that the whole entire home is maintenance-free. So the yards, front yard, backyard, the landscaping, everything is maintenance free. So it's a lot easier to live in a single family home that is taken care of by the whole neighborhood, rather than if you were to rent a single family home in a neighborhood that's not a BTR SFR. Attached garages. I mean, in our deal right now that we have in Arizona and Tucson, we have 2-car garages for every single home that we're purchasing. And in a city that gets above 40 degrees Celsius or 100 degrees Fahrenheit 4 months out of the year, to be able to have a garage where you can park your car, that's a huge plus, especially when you compare it to apartment buildings where almost always there's no garages there. And also safety concerns as well, having a garage door closed before entering your home. Amenities, a lot of these BTR SFR come with amenities. So again, we were making a comparison if you were to rent in a neighborhood and not rent in a community of BTR SFR, where some of these communities have amenities. So instead of driving to the neighborhood community center, you can enjoy the pool or the gym or other amenities in the community that you're living in, the BTR community. Privacy, of course, you don't have paper thin walls with people living above you and below you, next to you. So it gives that independence of single family single family homes. Let me see here. There's some other points here as well. So on average, the rents that BTR SFRs are demanding is 20-25% higher than multifamily. But I want to also talk about advantages to investors and talk further about that. Is that when you're buying, especially when the business plan is to buy these brand new homes like we're doing in Tucson, you're getting a warranty from the builder, the developer. So these homes, there is no concerns as far as any renovations or upkeep. Most of that is being covered by the developer that you're purchasing from, if that's the business plan. And I'll go over in some few later slides of business models that exist in BTR SFR when looking to enter this this asset class. Another very important point, benefit to for investors of BTR is that usually the investors who own BTR SFR, they also manage the HOA, so they can set the rules and regulations and bylaws of the community. So if you have a single family home and you've rented it out in a neighborhood which is not BTR SFR, the tenant can, for example, have a ugly pickup truck right in their front lawn, and some neighbors might not be happy. As long as the city doesn't come and ticket them for it, they can do whatever they want, right? It's hard to restrict tenants as such. Whereas in a BTR SFR community, because of the HOA, the HOA being managed by the investors, by the investment group, you can set those regulations that people can't, they have to, adhere to the rules and what have you. We talked about the tenants. The tenants are also known to be more stickier. It's a term used in our space, is that they tend to stay longer in single family homes than they do in apartments. So that turnaround is much less than it is in the apartment space. Growing demand. Yeah, we'll touch on growing demand for single family rentals, and it's very interesting what's happening. And this has really been, the demand has been expedited post-COVID. I'm sure we've all gone through COVID, and people living in apartments felt like it might be too small, too constrictive, and there is really a flight to quality, and people want to live in single family homes rather than living in apartments. Now the other great thing is that many different demographics, such as baby boomers, such as new couples, such as new families, they are choosing to live in single family homes. If they're in the rental pool, they rather live in single family homes than apartments, because of all the benefits that living in a single family home provides. So you're having different demographics coming in. For example, in our project in Tucson, and I use the Tucson project as an example, lots here because it's a project that we're working on currently, is that we have designed one of our floor plans to be one level. So it is to cater to baby boomers, so they don't have to walk up and down stairs. It's one level, maintenance free. So those are the some of the growing demands that are into this space. As you can see also here is the renters who are known as 100K renters or renters by choice are people that can easily afford to buy, but they rather rent because they want to be able to have that mobility if they wish to move and live somewhere else, or if they had a job offer from a different company in a different state, they get that flexibility of moving. So they're not buying for those reasons. So we went over some of these, and you can see again, it's in the Wall Street Journal and a lot of other publications. This is very, very common to see BTR SFR. And we looked at this earlier slide, which a lot of large private equity firms coming into the space and continuing to grow, but investors are sharpening their focus. And we're going to talk about investors is not only on the institutional level, but is also groups like us, like CPI Capital, a smaller real estate private equity firm. We're really following the lead of these larger groups, watching KKR and Blackstone investing billions of dollars into this asset class is really piquing our interest of wondering, hey, what's happening here? Why are they investing? And I make a correlation with a lot of developers. They follow where Starbucks is putting up their next, a coffee shop, is because Starbucks budget in research is tremendously higher than a small investment group. So by following, they've done majority of the work for us. Same kind of concept when you look at BTR SFR. Obviously, there's other variables of where you're investing and what the business plan is, but this asset class has shown such growth and such poise that we're just basically following the footsteps of these large private equity firms to get involved into this space. I want to also go over some stats for you because I think it's important. And although mom and pops owners still hold the bulk of SFR, institutions are increasing their footprint. MetLife Investment Management estimates in recent research paper that institutions own some 700,000 single-family rentals in 2022, about 5% of the 14 million single-family rental units nationally. By 2030, institutions are expected to own about 7.6 million homes, accounting to almost 40% of all single-family homes will be owned by institutions. There is some pushback. People feel that these large institutions coming in and owning all single-family, then they can also demand rents, and that will push up rents. But rents are going up, as we know, because of inflation. And when you create competition in a free market, it allows for others to come and compete. So that doesn't necessarily mean it's bad for the renters pool. Currently, institutions have 25,000 units under construction in communities of 50 or more. And that's what we talked about. Again, why do they focus on communities of 50 or more is because that's where the economy of scales comes in. The project we're working on in Tucson is 71 single family homes. Another important item to mention is between 2000 and 2014, roughly 2,500 units in these communities were delivered annually. Average annual deliveries rose about 5,500 between 2015 and 2020. And these are communities, these are not units. So that's a tremendous growth. So we'll keep going our presentation here. Is it a right time to invest in the BTR market? Obviously, we know we're with the debt markets going where they are, and the Fed most likely not slowing down, even though there is some pushback now coming with the way the interest rates are continuously being increased. It seems like that is the only tool they have for to curb inflation. So now, is it the right time to invest? And I really, the important part is what the strategy is, right? So, the supporting argument for investing in BTR is really the yields that exist in BTR are still there. They're still available. So it's not a 1970s, 80s apartment where it's you're hoping to get these rents from the renovation you've done. The single family is a superior product, so those yields are still there for investors. And single family homes, they are a better hedge against inflation because the cost of material labor have gone up, and it's much harder to build the same home if you were to buy one that's already built in a community. And the rents, again, like I mentioned, rents are still poised to grow. Another fact is that rental homes have been historically less volatile during a housing boom or bust. So it's important to note those items as well. Housing shortage. So yeah, I mean, this is not only focused on build-to-rent single-family rentals. This is also about the housing shortage that exists in the U.S. Depending on what reports you look at, the U.S. is between 5 and 6 million units short in what they, and what they need. Also, you got interstate migration, you got international migration coming to the U.S. So there is a high demand, and really the market never caught up since GFC because a lot of developers either went belly up or they were not developing a lot of projects. So there is a lag there, and they're trying to catch up. So BTR SFR really helps with the need that exists for the need that exists for supply in the whole nationwide market of if it's apartments or single family, the rental need really. Rising mortgage rates. We touched on this earlier. Again, rising mortgage rates is pushing home buyers out of the market currently. They rather rent and figure out where the markets are going to be, or the debt services are going to be actually higher than what they would pay for rental on a home. So, it doesn't really take an economist to figure that out. In our deal presentation for our Tucson deal, we actually done a side-by-side comparison between people in the neighborhood that were purchasing the asset if they were to buy a home in that neighborhood and what the debt service would be. And the debt services, depending on their down payment, is actually between $300 or $700 more than what they would paying for rent. So Again, this slide talks about the rising rates. Again, syndication. So I want to briefly touch on this. Is that great? So if some of you might be on here who are more passive investors or are not really involved in the real estate space, that they could go and buy 50 homes or 100 single family homes, the syndication model, real estate private equity, allows passive investors, retail investors to be able to invest in these projects by pooling their capital with other investors and a general partnership, sourcing, managing, executing the business plan. And the syndication model really allows for retail investors to enter this sector. I won't spend much time over the GPLP structures. It's the investors are the limited partners. They have limited liability. The sponsors are the general partner. They have unlimited liability, and they manage the project for a portion of the profits that are made at the time of a capital event. This is the project we're working on in Tucson. It's an aerial view. As you see, it's 71 single family homes in an infill piece of land. BTR SFR is usually built in the outskirts of town because there's availability of land. This particular project was infill that the developer had locked up 3 years ago, took it through entitlement, and started the process for construction. That's where we came in and we bought it from them. So this is a project we're working on currently. This is a dinner we had with our investors. This is in our slide. This is to connect with us. So if you like to connect and you would like to learn more about investing in BTR SFR, connect with our team, and you can do that. I'll be notified if you scan the QR code or you just send us an email. We'd be happy to connect with you. And that concludes my presentation.
Yeah, thanks, August. That was a great overview. I have a few questions myself, but I want to start with like some of our audience. So if you guys want to basically put your questions in the chat or actually just speak up and have a conversation. So first question actually from Christine. So which areas you actively are you actively looking to buy and build, or are you only looking to buy BTR communities already built?
Yeah, great question. So there's a two-part question, right? So you're talking about regions. Regions really, they mimic the strategies that exist in multifamily, because at the end of the day, it is horizontal multifamily as we talked. So the Sun Belt, Sun Belt regions that show consistent growth metrics such as job growth, population growth, income growth, rent growth, states and regions that are business friendly, landlord friendly. Those are the regions we're in. Now, as far as are we purchasing already built or are we developing? That's an excellent question, because it opens a door for me to talk about strategies that exist to be able to invest in BTR SFR. Again, BTR SFR, the name is a bit confusing. Is build to rent is like, okay, build to rent. Am I building it? Is somebody else building it? Are we buying it and building it together? So there's different strategies you could use. So an investment firm, a syndication firm, an individual high net worth investor could partner or hire a developer to build these projects. So they could source the land, take it through entitlement, start the design and the construction, and then the plan is to build to rent. So that's a strategy that's used. Also, there's other strategy that's used is when these communities are already built, and an investment firm goes in and purchases the already built community. So they're taking lease up risk at that stage. They're not involved in construction and development. The strategy is just buy the homes, lease them up, stabilize them, and so on and so forth. The strategy we're using, which wasn't really a planned strategy in this project, is that our team sourced this deal from a developer who was not a BTR builder. The developer always built community of single family homes and sold them to an individual buyer when they were built and sold. That built over 2,000 single family homes and over 50 of these communities. So our team reached out and said, hey, we'll buy this from you. We'll go into contract today. We'll lock in our price. We'll give you a deposit. as you build the homes and deliver to us at certificate of occupancy, we'll actually complete the purchase and buy them from you. So our strategy is a bit of a hybrid strategy. We're not taking, and when I say we, other groups utilize this model as well, but it happens to be the model we currently utilize. So it's a hybrid model. It's not a model where you buy the land and you hire the developer, or you are the developer and then you build it and sell it. And it's not a situation where you walk in and everything is already built and then you buy it. Then it's working hand in hand with the developer, taking advantage of the profits that are to be able to be made, because you're coming in early on rather than for the project to be fully built. So there's also other strategies as well where, like I mentioned about Blackstone and other groups, initially when they were doing that post GFC, they were actually buying a single family individual homes as a portfolio. So they were scattered. That's a possibility as well. Some groups go and buy these portfolios, which is, they're buying scattered, but they're in a similar area. So the management cost is still reasonable, but that's not a strategy we follow. We want everything to be in one community. You could also buy a stabilized community where, it's already been built, it's already been running for a while, and then the investor is coming to buy it. So multiple strategies within this asset class that exist, and I just mentioned a few of them. So I hope that answers your question.
Mm-hmm. So in this case, so to your point, actually, August, so the developer was really a single family developer, like building sort of on a single lot. But that is like extremely appropriate to actually kind of pick up and, make it into a BTR community and so forth. And right, so in terms of like, I was curious, like the rental, like the institutional rental investments, that is, so you mentioned it's like currently like, or most recently around 5% of the single family rental stock, right? And to rise to as much as 40%, you said, by 2030, which is incredible. And so that, how much of that do you think is BTR or more like the scattered portfolio situation?
I think it's definitely a combination. I'm sure that as far as purchasing a community compared to scattered portfolio, it makes much more sense to purchase communities. But this trend, because of the yields that's there, investors being institution or others, they're chasing yields. So when the yields are there and it's a superior product to what else is in the market, and the rents are somewhat similar, it's just a no-brainer for tenants to live in a single family. So I don't have those exact data as far as what portion of it is scattered or in a community, but my guess would definitely be because of benefits that are in one community, investors would be more focused on that.
Right. Yeah, of course. That makes sense. And so another question like Christine is asking, so, Christine, do you want to speak up actually? Because I'm not sure I understand your question.
Hi, everyone. Thanks. Christine over here in South Florida. Thanks for coming to the call tonight, August. Yeah, so here in South Florida, BTR, not an uncommon, let's call it, asset class that's, existing and or, a lot of people have been going after for the last few years. The questions that I wrote in there was, what's the minimum amount of land that you look for to be able to build?
For our current project that we have is 7 acres, and we were able to fit 71 detached single family homes with a bit of, I wouldn't really call it a backyard because that's really relative, but there is a bit of a yard there. So the importance is to make the best use is to have them as close as possible, these single family homes, but still to give the independence of each one. So I would frankly say anything above that 5 acre mark to be able to hit that minimum 50 single family home community for it to make sense would be my guess.
I understand. Is single family just what you build, or do you build townhomes also?
Keep in mind that we're an investment firm. We're not a developer. My background, my background isn't building single family homes, but more on the custom spec single family homes, not as a community. But our strategy is to be opportunistic. If we can find a deal from a developer who's looking to sell to individual buyers and we can come buy everything on a discount as a wholesale buyer, we'll use that strategy. If there is a already built, already operating community, we'll go in and buy that. So we're really opportunistic in this space. But as far as development, we're not developers. So we're coming in after or in conjunction with the developer.
Got it. Okay, I understand. Is there like a minimum square footage that you buy per house?
It's our competition is multifamily apartments, right? So,
Sure.
And in our current project, the average square footage is 1,500, and that's well above what's in the market for apartments. So I would really reflect that, which 1,500, I think it's a decent number, not too large of a house, not too small. You can still get, our 3-bedroom, 2.5 bath is 2-level, 1624, so very decent size. And for people who are looking to live in these types of communities, that works the best. Now, keep in mind, there are other groups that are building more luxury, I would say, BTR, SFR, a lot of groups in Phoenix that are doing that. They have like really beautiful amenities as well. So, but when your focus is that workforce housing, your focus is competing with multifamily, I think what we have, and I'm sure other groups utilize this as well, is the basics basically, right? Is to have you're not building a luxurious.
Right. Yeah, you're appealing to blue collar workers.
Exactly. Blue collar workers, where a rent for a 1980s apartment is $1,800, and they can come and get a brand new home, 1,500 square feet, 2-car garage for $2,000. So sure, like data and numbers and analytics are great, but using your common sense as a real estate investor, common sense never fails, right? In most cases.
Absolutely. Thank you. What's the minimum that you buy in a community if it's already existing?
50. Now, there is a community close to this project that we're looking at in Tucson, and that is less than that 50 mark, but that's because we just want to expand the reason we're looking at that project is because we want to expand our footprint in Tucson. Right. So we could own both of them. So, but if it was just a new project in a new area, probably had to be that between that 60 and 100 number.
Got it. Thank you so much.
Of course. Thank you.
And so, so you mentioned actually, August, like BTR essentially it's a commercial asset class sort of becoming, right, or already in that sense. And so, as such, do you know like what are for already built? Because I know you guys are coming in kind of in the sort of lower risk development stage, right? Kind of there's a developer who has done a lot of the work already. But in terms of like for new already built BTR versus sort of a class A multifamily, would you say like where do cap rates, is there any data on like where cap rates stand compared to a class A multifamily both are already a finished product, let's say? Yes. I'd be curious if it's considered a lower risk or that I'm considering it's, to your point, like to very much like the common sense point, it's like really a superior product, right? You have 1,500 square feet for, sort of like a bit higher rent, and it's like very efficiently managed in the community and so forth. And it seems like a no-brainer as a renter for sure. And so, yeah, so just curious, like how the commercial, like institutional investors are pricing it in terms of cap rates.
Yeah, no, of course. And I don't have any exact data to back what I'm saying, but in my conversations with BTR SFR agents nationwide, BTR communities are as assessed at a lower cap than the comparable Class A multifamily. So definitely, I assume they're considered lower risk. Also keep in mind that at times, these BTR SFR communities are individually titled and individually metered. So it allows for that risk mitigating factors at the time of exit for them to be sold individually. So it gives that flexibility that you don't have in an apartment building. So that's another benefit that BTR SFR really has. And then we can talk about being individually metered. Again, that's a big advantage because the tenants are getting all the utilities rather than the apartment building or the management of the apartment handling that.
Right. Yeah, that's exactly. That's another kind of risk mitigator for sure, and like expense mitigator. And then you mentioned also like even like the HOA being managed. That's another kind of form of control and like risk reduction, kind of producing as a whole a higher quality asset.
Yes.
It sounds like. And so in terms of I really like also like the density kind of discussion, because it appears, I mean, like, and that's been like since COVID, but it seems like low density regions are heavily outperforming, even until now. And so that's basically capitalizing on the suburban trend. It's capitalizing on essentially housing being too expensive with like mortgage, like very low mortgage affordability. So those are definitely extremely advantageous items, and I think it's a great class, and it's really interesting to see like what you mentioned with regards to the percentage of institutional capital in that. So do you think some of the sort of growth of BTR could have come from the overall like technology advancement in being able to price single family homes algorithmically? Like the thing that was a bit notorious with Zillow and so forth, but sort of the emergence of automated valuation models.
No, that's definitely a technical question. Yeah, I'm not very familiar with the strategy that Zillow had and how they entered the market and then exited at a loss. I'm not sure if this matched their business model, which was more providing data and information, and they have some long-term plans as well. But overall, personally, I feel, and our CEO, Ava, says this, is that how disruptive Airbnb was to the hospitality industry is what BTR SFR will be to the rental pool and the rental industry. Is just the flight to quality, right? Is to be able to live in a single family homes in these rental communities, to have that independence, to have that mobility. Frankly, if I had the option to, to be in the U.S. and then, live in a certain state for a while, I'd rather live in one of these communities that everything is taken care of, but I still have, convenience of having a single family home. So I think the trends are really what happens, right? Trends come in and some of them stick and they grow, and some other trends die out. I think this is a trend really to stay, and we can keep watching it. But as far as the growth has had over the last 10 years, and particularly the last few years, it's just been tremendous growth in every aspect of this asset class. We do have a question also down in the...
Yeah, absolutely. Yes. So Steven is asking, so are you offering any amenities in your communities like MultiFamily does, such as swimming pools and community clubhouse?
Yeah, great question. Again, as I was giving my presentation, a lot of these BTR SFR communities do come with communities. In the one that we have in Tucson, we did the numbers on it. It didn't economically make sense for us to have a pool or amenity center there, because it would require us to have an on-site property manager, and then we're not doing that. Our property management costs are much lower not to have that. Also, it's somewhat of a blue collar neighborhood. It didn't really economically make sense for us to have those amenities there, but it is common for BTR SFR to have amenities, in the community.
Mm-hmm. No, are you seeing any BTR built in sort of areas that are considered less growth ones, like Midwest or others, or no, none so far? Is it all in the Sunbelt area?
It is in the Sunbelt. It is in Sunbelt. It's becoming more common. Obviously, Florida, our friend mentioned, Florida is very, very common. Christine mentioned Florida is, it's happening, but it's growing in other areas. I have deals now that we're venturing into this asset class. I have brokers and other deal sources contacting me from a lot of different regions. Alabama, for example, it was somewhere that we were not looking at all, and now there's deals and communities being built in Alabama and other areas. Also in other places. I mean, if you do a simple Google search for BTR SFR, a lot of information comes from the UK. So this seems to be very common in UK for them to build to rent as well. And in Canada, it's it's a strategy that can really help housing. Because of a lot of the different items that we mentioned. So I think overall, and also as technology grows, you have different companies like Elon Musk is connected with Boxable, is a company that it's like they can put up a home in a matter of minutes, which is like the Transformer movie where they just the home comes up. So imagine putting up a community of single family homes with these single family homes that come in a size of a shipping container. That's the size, the dimensions, and then it expands into a single family home. And I believe Elon Musk lives in one of these, but that will improve that. If this concept now, the construction cost and maintenance cost gets reduced, this can be duplicated a lot easier than building a multifamily building or a more highly urban area. And
Mm-hmm. So the agents that deal with that, are they the usual multifamily agents, or are you seeing kind of like new faces, new people in that in specific markets that are there? Are they exclusively focusing some of them on BTR, or perhaps not yet?
Yeah, there are some. There's I think the most active broker in this space is Adam Stern, and I believe he's sold more BTR SFR in the U.S. than any other broker. So there are BTR SFR focused brokers, but a lot of times is people who are in that multifamily / BTR. At the end of the day, it's because it's a newer asset class. If a developer or a seller is looking to contact an agent, it's going to be the well-known agent in that area who's going to be handling the BTR. But I've also seen people who are strictly focused on BTR SFR. That's what they do.
Mm-hmm. Yeah, and Christine mentioned like also 3D printing as a new concept to build homes quicker is another kind of helpful technology. So definitely leveraging, kind of benefiting from a lot of technology, I would say, the asset class. If you think about it, definitely does seem to be the future, in my opinion. So it's a great one.
3D.
Do you guys? Right. Yeah. So do you guys have any other questions you want to ask?
Hey, I have a question.
Yeah. Hey, Scott.
Hey guys, do you guys see that little hand I put up there?
Yes.
Oh,
that's cool. I've never seen that before. It's like a little sticker that goes on the screen.
Right.
Anyways, I love this, August. Thanks for this presentation. I'm fascinated by the topic. There's a group out here in Phoenix who's been doing this a few years. They go by Modus, and I've been kind of following them and trying to understand how you make the numbers work on these communities. Just to rattle off like some ballpark figures, just to kind of show what I'm saying here is, like, I know even the production builders are building homes at like $200 a square foot. So that's what, $300,000 for a home this size, not including the land costs. So when I just look at, building a BTR community on the outskirts of town, and then you're all into these homes at $325,000 or $350,000 a foot, when you include infrastructure and land and everything else, or $325,000 to $350,000 all in costs. I'm just wondering, those homes maybe will rent for $1,500 a month or $1,800 a month, just based on my quick analysis. And I just, it's hard for me to find out how these pencil out unless there's maybe some grants or some other money that's coming in from sources that I'm not thinking of. So could you just speak to that on how the numbers and economics work of these deals?
Of course, the rent to value ratios are just a bit higher than you quoted. So, for example, the homes that we're buying, aggregated price, we're buying them for $300,000, and we're renting them for aggregated price approximately $2,100. So it is a bit higher. So the yields are definitely there. Now, depending on, obviously we're in the business of NOI. That's our focus. We feel that because of inflation and other factors, as rents grow, the chances of a single family type of product that we have, the rents will grow, more than an apartment product. But yeah, currently the numbers still work out even in the debt environment that we're in right now. But yeah, that's a great question. More than happy to send you our underwriting if you like.
I would love to see it.
All right, man.
And so
I guess
August, no, go ahead.
Sorry.
Go ahead, Scott.
I was going to say, it didn't sound like anyone else was speaking up. I was going to ask, you mentioned the Boxable Communities too. I'm curious if your group has looked into doing this with the tiny home community concept in mind. I know that that's more challenging, getting those types of build outs approved. There's like minimum square footage requirements, but have you looked into that at all? Or do you see that maybe being part of our future with these types of investments?
I'm not familiar with, is it micro homes you mentioned, or is it?
Yeah, like tiny home or micro home. Yeah.
I'm not familiar with that concept. I'll definitely look into it, but that's not something we've pursued. Overall, I've always tried to, in our investments and our strategies is to, stay with go with the grain. Don't do something that's too outside of the box. Is just, go with the flow. And we feel like we're not the first doing this. Obviously, a lot of capital has been spent on this business strategy. So we feel that we are still ahead of a lot of other groups. A lot of, especially with syndications and syndicators, they're very focused on multifamily value add. They're not deviating from that, and we feel like we're ahead of a lot of other groups and entering this asset class. So that's definitely we feel proud of that. But as far as micro homes or other types of structures, I have not researched it yet.
So, but are you guys, because I know you mentioned like speaking to like different brokers on BTR, like, so are you actually looking to more significantly expand like in the BTR space after this? Like, do you see it as potentially a bigger focus than multifamily for you guys in the future?
Yeah, absolutely. We're still multifamily investors. That's still our focus as well. But keep in mind, this project, because of the way we've structured our purchases, we're going into contract today, locking in our price. The builder then starts building the homes and then releases it to us in tranches. So in approximately 10 to 12 months from today, we receive the first 8 tranches of homes, at which time we've already had our property manager pre-leasing them, and that's paying off our debt service. And then we'll receive 8 more homes every month from there until the 71 homes are built and delivered to us. So that could take close to 2 years. But at stabilization, that's when we're also going from our bridge debt to our permanent agency debt. That is when our proof of concept is really there, because our investors are getting the cash flows that we forecast and what have you. So I would say we're probably going to be focused on making sure this asset class performs prior to making other investments in this structure where there's a need for us to wait till the deal comes in. So, but a stabilized asset, which is a single family community for sure. But this particular model, I'm not sure, because they're very far in between. It's not very easy to find these types of communities. So I wouldn't say that that's something we're looking to invest in right away. But BTR SFR for sure, communities and other projects.
Right. Yeah, that makes a lot of sense. Okay, so like any last questions, guys, before we wrap up for today? What's of great information here? This like very innovative product, coming in stronger into the market. So, okay, so what is, August, like the best, I know you shared like best way to reach to you. You have like the QR code. If I know you've guys been already like collecting like your soft commitments on your project. So if you wanna, I'm not sure if you are accepting funds or not, but if that's something you want to share, or if it's shareable, I don't know specifically.
Yes, no, it is. No, for sure. This is a 506c offering, so it is available to accredited investors. Just get in touch with me. You can either go to our website, cpicapital.ca. You can reach out to me on LinkedIn, August Biniaz. It is a pretty unique name, so I believe I'm the only August Biniaz on there. Or the QR code that you saw earlier, you can just scan that QR code for people who are rewatching this. For people in the group, I can put in my LinkedIn link if you wish, and be more than happy to connect with you on LinkedIn as well. I'll just pull
Yeah,
up.
I know you guys are very active on LinkedIn. You have your newsletter there as well.
Yes, very active on LinkedIn. I'm a big believer of LinkedIn. Feel like everyone's CV is right there, so I don't have to go research them. It's not Instagram or other social media platforms. But yeah, thank you for the opportunity, Stefan, and thanks to everyone for your questions and your patience. I really appreciate it, and I hope I added some value to you tonight.
Absolutely. Thanks, August. That's great. Have a good night.
Okay.
Thanks everyone for joining.
Bye-bye.